Welcome to another episode of Coffee with Samso, where we talk to ASX companies and CEOs about their projects. Today, we're going to be focusing on a particular project that Venture Minerals have. I think it's a topic worth discussing. We've just seen recently a bit more focus on tungsten. However, tin's got had a life of its own and started running it, so I thought this would be really good because Venture has a project that's was almost ready to roll at one time, and I think it's come back into fashion. So Andrew, and I've got Andrew Radonjic here, and he's going to just give us a quick rundown on Mount Lindsay. Andrew, fire away.
Well, thanks, Noel. Yeah, look, it's we've just saw the tin price go up 18% the other night, so that's right. It's a good time to talk about tin, and tin's been moving. I think it was 15,000 or something like that, middle of last year.
Correct.
So yeah. It's almost doubled, in 6-7 months, and we've been watching it slowly and careful. Well, we're always watching it, the tin project, and it was our flagship asset back in 2012 when we spent $35 million getting it up to a BFS. And we were going to do a large open pit on top of Mount Lindsay with a small underground underneath it, and the project had a $142 million NPV. But it had a plant, a 1.75 million tonne per annum plant. We had to spend a couple hundred million dollars to build. And the plant generates a tin concentrate, a tungsten APT product, a magnetite concentrate, and also a copper concentrate. So it does a lot of things. So metallurgically, the project ticks all the boxes. It does actually work. But the interesting part about it is that we needed a little iron ore mine called Riley to help fund that. So back in 2013, Riley was making $100 million, and that was going to solve half of our financing dilemma. So the project's sort of very advanced in the permitting, but as we know, the iron ore price came back down in 2014, and we didn't do anything. But we now Riley's at a similar stage in terms of what it's worth, and we're actually going to be pulling ships out of that in the next probably 3 months. First shipment will come out of Riley, and then where are you going to spend that money? Well, as it was back in 2012 or 2013, we're going to spend the money on building Mount Lindsay. But Mount Lindsay, we're going to look at doing a smaller, higher grade, underground focused operation. So we're just going to change the permit around a little bit, so the focus will now be more on underground. So it'll be smaller mine, only be 500,000 tonne per annum plant, but it'll still be 8 years. And the great thing about it is that the capex is only $50 million. So the whole focus has changed. But we've been working on that, so we nearly got that study finished before the iron ore price shot up in Riley. But now's the time to start switching our focus once Riley gets built into getting the last pit of Mount Lindsay prepared, and hopefully we'll have the money to build it. That's the plan.
I mean, the whole project is sort of multi-commodity focus, and there's going to be, as you said, credits coming from the magnetite as well. So let me rephrase it. Would that help in terms of bringing your capex OPEX down, in terms of those credits?
Well, absolutely. Look, I think some of the numbers we were running before, and the tin price was, in that study, was 23,000, but it was a 90-cent exchange rate. So here, exchange rate sort of, around that 77 cents mark, and the spot price was 28,000 now. So, back then, our cash costs were sort of like 11,000 US, and essentially by the time you take the tungsten credits off and the magnetite credits off, you're actually getting the tin for free. In fact, it's negative cash. It's the tin and tungsten are really co-products. So 40% of revenue is tin, 40% tungsten, and 20% the rest, which predominantly is magnetite. And that's sort of the magnetite does all the heavy lifting. Essentially, gets pays for the mining and all that, and we're getting that's probably $200 a tonne dirt at the moment. So at these prices, that's 200 US.
Yeah.
Yeah. So
I think if you talk, it was a bit like the gold thing where the exchange rate was helping the Aussie gold price for the Aussie gold miners with the margin. I think it works the same way for you guys as well if this comes in. And we had this discussion before in one of our coffee with Samso, where we said, look, the tin price is running, therefore that follows with the tantalum. The tungsten.
Yes.
So I think I think I was caught by surprise at how fast it's gone to 28,000. I remember a discussion that tin was profitable at 25 when it was at 20, and people were waiting for that magical figure, but it sort of never came, and we've surpassed that now. Look, in terms of the project, I mean the grade's pretty good in terms of I sort of understand the grade of the tungsten grade. 0.1 is actually high in the tungsten world. What's your grade? The tin grade, how does that compare with other deposits in the world?
Yeah, well, the tin grade is it's modest. It's running on that 0.3, 0.4 mark in our underground project, but the tungsten's about the same grade, which is, as you say, it's quite high. So you got this unusual scenario where you're mining two ore bodies. They're only 150 metres apart. They're skarn deposits. One is more tin focused, which was mined back in 1910. On top of it, so more of it's tin focused, with a little bit of magnetite and a little bit of tungsten, a little bit of scheelite, tungsten. Whereas the other zone was called historically number 2 zone by Aberfoyle. The main zone was a tin. Number 2 zone, you got a lot more magnetite and scheelite. Some of the core we drilled in the early days, and there were 65 drill holes. There was 17,000 metres drilled before we turned up. We drilled another 83,000, 100,000 metres of diamond core into this project. But when we drilled hole 65, they drilled the first 64, and then the last hole we drilled, I think, was hole 335. But hole 70 hit, I think it was 20 odd metres at over 1% tungsten. This is King Island type grades. And some of it was in this magnetite skarn. It was just this black rock with big chunks of scheelite. So you put the UV lamp on it, it looked quite spectacular. And in some of our flyers and promos, you'll see, and even in the past, and our new website, you'll see the scheelite. How it lights up beautifully. That sort of purpley, blue purpley colour, but it's a very coarse scheelite. So that's that rock's worth a lot. So you got one zone that's got, like I said, number 2 zone's magnetite, scheelite, dominant, but it's got a bit of tin in it. So you're kind of diluting, a tin-rich ore body with a tungsten-rich ore body, and that's why the grade gets diluted, if you like. Because, we drilled hole 102 back underneath the Aberfoyle drilling, because the high-grade chute near the surface kind of pinched out. We drilled down and we hit 28 metres at 1.3, 1.4% tin. And then that's a big high-grade blob, and we drilled that. And we drilled it out by 20 by 15. So all the high-grade part of the ore body is mostly measured. It's 83% of it's measured and indicated. So a lot of those zones is we drilled by 20 by 15 metre, and it's HQ core, NQH, so we can get lots of metallurgical sample. So I've worked in projects before where we started mining a pit. This is back in my gold days near Kalgoorlie, and we're mining a pit, and we're still drilling the deposit out. We started mining it, because the urgency for the mill feed was so great. And I saw, we were forced to do that, and a lot of mistakes were made as a consequence of that. We ended up mining it, but it's quite stressful, and you've got to rely on a little bit of luck because you haven't got the data. But in this case, I was very adamant that we'd go and drill the holes into the heart of it quickly, early, to find out does the high grade hold together or not. So that, having done that exercise on those 2 ore bodies, the benefit of that is, and skarns are more they have zones of minerals rather than sort of being, it's not a narrow vein thing. Like Brandison's a narrow 4 metre wide massive sulphide. That's kind of what it looks like. But Mount Lindsay is this, in the skarns, is this 30 metre wide zone of mineralisation with all the minerals in it. Your magnetite, your little bit of chalcopyrite, a little bit of sulphides, and you got, like I said, 15% of the rock is magnetite already, and you got your tin and your tungsten, and you got so in the open pit you got if you cut a Fletcher plan through the pit, we used to take the brokers down there on a site visit. So go to this little town on the west coast of Tassie called Tulla, and we'd say we had our core shed next to the footy oval. So we go to the footy oval and we stand there, and I said we marked out this wide zone going from the goal square one end to the other end, sort of 30 metre wide. I think would sort of pinch into the goal square and then blow out to about 30, 40 metres and then pinch in again. And I said, this is, if we were an open cut and somebody marked out one of these zones, that's the dimensions of it.
Yeah.
Huge tonnage. So it was really made for an open pit. But going back to the underground sort of things, within that, if you like, zone of mineralisation, you've got a better zone with cassiterite, most of the cassiterite's are coarsest, best recovery, the most intense drilling. It's actually, the underground's kind of like attacking the least riskiest of the deposit, the best known, best met, the best information. So that's, so by us converting it from an open pit to an underground, and we did that not only to get the capex down from 200 million down to 50 million, and also we had to simplified the flow sheet there, and I'll talk about that in a second. But a lot of it was about getting the met would be easier, to getting the flow sheet sorted, and the flow sheet with a tin, the tungsten, we get a little bit. The gravity is very similar on density, is very, very similar on those. There's scheelite cassiterite, and what we did on a flow sheet is that we found right after the BFS was finished, essentially we went through the exercise of cleaning up the high grade tin con and the gravity, and what we found, very, very quickly, is that we tried a whole bunch of different processes. Is that we know tin's conductive, because it's used in solder and semiconductors and in anodes of batteries, lithium-ion batteries as well as lead acid. But tungsten is not. So we trialled this ESP, electrostatic separation, a off-the-shelf technique used in the mineral sands sector, and then the metallurgist kind of went. Our chief metallurgist went, "Oh, that's a big breakthrough for our flow sheet," and all of a sudden our flow sheet, instead of being using floating off the scheelite away from the cassiterite, using whole ore flotation in the scheelite and gravity and float for the tin, all of a sudden we could just go pure gravity stream, produce a combined con, dry it, and then put it through the electrostatic separators. So all of a sudden the flow sheets become simpler, and that's why we've gone from 200 million down to 50 million. So getting back to the reason we did started this study back in 2018 was not only because we can get something that's affordable. And back then our market cap was 10 or 15 million. Now it's significantly higher than that. So it's, but anyway, it's still, I think it's the right strategy to go. But the other side of the coin is that it makes permitting easier, being an underground mine and being an open pit, getting the tailings, putting them back in the underground. So we're just minimising our footprint. So just to make the permitting a lot more easier, and that's why we can finish this last bit off, because we went to the EPA with this large pit in Tasmania, large pit. Western Australia is not a large pit, but in Tasmania it is. It's a big deal. Big waste dump. This is their words: big waste dump, big tails dam. Big, but it's not really big. It's just in Western Australia, be normal, standard. But we could see that it was going to take. We got feedback on that, and we sort of, so we've done all the flora, fauna surveys, done all that, all the waters. That's all the hydrology. So all the work's been done. But just changing the focus to going underground, I could see the relief in their eyes already, going, "Oh, this will be much easier," because every other mine in Tasmania is essentially an underground operation, except Savage River, which has been going for 50 years. But look, I think that's the reason why we did that, and to get that capex down. So something that's quite billable, and certainly when I start plugging today's numbers into that financial model on that study we were doing on the underground, I can see multiples of our capex there now, which I didn't see before, and in fact multiples above where our market cap is at the moment. So it's a significant asset, and we probably need to finish that job off and get it out to the market and say, look, this is the most economic way of building Mount Lindsay. And once we start Mount Lindsay, we've hardly done any exploration. We're doing a little bit of exploration once we stopped drilling, once the commodity prices came off, because we just did, like I said, we just kept on extending the drilling that had already been done back in the 70s and the 80s. And that drilling sort of, so we never really did exploration per se, but, you would have seen we did the EM work, we announced that to the market, and we got the co-funding for 3 holes, but the best drill hole is just a long strike from Renison, and just point to this map over here, Noel, because you can see that, we've got the Federal Bassett Fault, we're only about 8 k's away, our tenure, but in that red ellipse there, that Renison style drill targets, it's the same sequence, same fault, and there's an alluvial tin field there mined 100 years ago. And there's a great, huge EM anomaly. And because, like I was saying Renison before, it's all massive sulphide, so the EM, that's how they explore. But they're sort of narrow. We've got this coincidental mag and EM feature that's begging to be drilled. And that's a fantastic target. So we've got a whole bunch of targets there, even more to what's listed there, shown there at the moment. We had 50 EM anomalies from our survey. And not necessarily will the little scarns light up on the EM, but you can barely see Mount Lindsay in the EM, but certainly works on a Renison style target. So we always used to say we've only tested 10% of our targets. So what we want to do is build a mine. We would call it stage 1, and then keep exploring and finding either the next Renison Bell or another Mount Lindsay, and then we can see 1 decade, but realistically, the big picture is multi-decade sort of type of project. Or like all the other Tasmanian, the Aberfoils, the Helliers, Aberfoil found. Renison's been going 130 years. Mount Lyle, 120. Roseberry, just over the hill there, 80 years. Even Savage River's been going 50 years now. So, long life mines. You're in the Mount Reid volcanics, great geology. It's hard work because the terrain is difficult, and that bitumen road that goes past Riley, which we're going to be trucking the ore out of, and goes past Mount Lindsay, goes to a Pieman Dam, just out to the west. That road's only been there for 35 years. Before that, you used to use flying foxes over the river and stuff like that, and it was just the stories that you hear from some of there's great University of Tasmania's got a great geology department, but some of the geos that have come out of there and gone into the industry tell me how they've been going on there in a helicopter getting dropped off with their food supplies, and we'll see you in a week's time or whatever. It's that road, we're now lucky that there's a road there and the hydropower lines and all that, but before there was no infrastructure. In fact, there was no road connecting the mines on the west coast to the north coast until 1964. So it's so still access is more of an issue. Prospectivity is great, but access is an issue, and using helicopters is expensive and all that sort of thing. So huge amount of exploration potential there. So Noel, we're focusing on for Mount Lindsay, which was our flagship project, and we were a $100 million company based upon that. Back in 2011. The idea was build a mine. And we will find more, and we will continue the mine life of that. It'll be a multi-decade operation, and what we've done now is we've changed it to make it more buildable, if you like, more permeable. Get something built, and then we will continue to explore, and this will deliver. We're super highly confident of that. So, so it's I could talk all day about.
Yeah. No, look, with skarns, I mean, when you look at some of these kind of similar type deposits in China, because obviously China has a lot of these kinds of tin, tungsten, well, not so much tin, but tungsten, and they're always in skarns, and they are very big. They're always very big. And skarn by itself is the way you get your skarn geologically, I guess. It's in a very simplistic form. You're exposed to big heat source, and when you've got the right geology, as you say, you cook the same thing, just in different places. In terms of obviously the strategically, I think in terms of where the world's heading in terms of critical elements, and I call them essential elements or essential metals. I mean the projects is good, like you said. Now you got Mount Riley that will turn into a self-funding situation for you guys, and you can develop this. I guess tin's going to take that ride, and I've seen a couple of projects where a tungsten project isn't making money from a tungsten project, but a byproduct, which then is feeding it, and eventually in time when tungsten prices recovers, which we are starting to see some movement, which, as we've said, seems to follow tin in some ways. Then you're going to have a double whammy on the positive side.
No, look, absolutely. Look, I think having the two working together is a good fit. And there's not many mines in the world who have that sort of almost equal value that they bring to the asset, to the project. And look, I think the tungsten's a bit more of is an even smaller market than the tin. But it is, as you say, critical mineral. It's they've often in the past been called strategic. The US used to have strategic stockpiles of tungsten. And if you want to. First time I want to learn about tungsten, the USGS did a great document back in the 80s on every tungsten prospect in the world. But I think the US now is moving back towards that. So you've got the Critical Minerals Facilitation Office being created by the federal government, and we've been talking to them about Mount Lindsay. Probably the US wants to be less dependent on China for these sort of commodities. They like rare earths. Tungsten's very much, they control, like 85-90% of the tungsten. So they look keen for supply. I think when we did the big open pit version of Mount Lindsay, Mount Lindsay was going to produce about 8% of the world's non-Chinese tungsten production. So Mount Lindsay is a big tungsten mine, but not necessarily a big tin mine.
Yeah.
But they work together to become economic, and that means we don't necessarily have to be at the mercy of just a tin price or just a tungsten price. And the magnetite's worth something now, and we can produce a little bit of copper. There's that 0.1% copper in the whole deposit. We haven't got a lot of sulfides because most of the iron's in oxide. But look, I think the economics just it's when we were trying to do cash costs, and we brought it back to tin equivalents because the market understood that a bit better. But forget about the grade at Mount Lindsay. It's if you focus on the grade and the tonnes, you need to focus on the fact that it's economic and it's going to happen. The metallurgy is great. The met's better than it is at Renison. We get 80% of our tin sits in cassiterite, a tin oxide. We get 90% of the 80%, so our recovery is 72%. Renison's sort of high 60s sort of thing. So. And they've been running that plant for a long, long time. So the met works very, very well, and all of our tungsten's basically is in scheelite. We understand it. So the things work well together. But in the future, we may find, if we do find a Renison belt, then we'll become more tin focused. But a lot of these other skarns will have, tungsten in them. Big Wilson, we've got 17 metres at 2% tin back in 2012. Going to do some more work there. So each one of those are going to be a little bit different, but we've got a flow sheet that can cover tungsten rich ore, tin rich ore, or a blend thereof. So that's the way we sort of build the plant to handle that. And look, it's a fantastic project, and potentially there's probably no value in our share price on the back of that, but. I think, like you pointed out, the opportunity, and maybe now we come back to it. We hold on to the asset, and we knew that the cycle would change, and we know that you've got the fourth industrial revolution, the green revolution is technological revolution is around everything being driven by or run by electricity, and it's all technology driven. And for that you need circuitry, for that you need solder, and still only 75% of the world's solder is 96% tin and 4% silver. There's still some of the old solder kicking around, which is 60% tin and 40% lead. Which is so that you've still got to do that transformation. But the miniaturisation sort of come to a level where, I don't know about you, but the mobile phones seem to be getting bigger, not smaller. And everyone seems to be not having one but two, and you've got either like yourself there, you've got your standard laptops, and then you've got all the all the things in between, you know, palm tops and all that sort of thing. You know, sort of it's just and during the lockdown, people have gone out buying more of these things to be, you know, to be entertained or to do work purpose, working from office. All of a sudden, you know, I've got a monitor, I've got a setup at home, I've got a setup at office, I've got to go and buy another monitor, and all these things have got tin, solder circuitry, semiconductors, the whole thing in them. And you know, just recently we've seen that the world's run out of semiconductors, and that's affecting EV production. So that's happened already early in the cycle, and the prediction is that by 2030 the world will need 30% more tin. And then, but half of the world's tin is comes from alluvial mines, and the LME put out a statement that would only wanted responsibly sourced tin, or any metal, not just tin. We'll trade in the LME and responsibly source. Last time I looked it up, you know, dredging the seafloor bed wasn't responsibly sourcing tin. You know, it's a lot of that alluvial is high impact, no rehabilitation, digging holes, rip, tear, bust.
Which is what's happening in Burma.
Well, that's right. You know, look, it's just out of control. But you know, if the Western world says that we're not accepting that tin anymore, there's a Frank Dodd sort of conflict minerals thing that came on and before, and you know, we can do that tracing system, and you know, in the Congo there were, you know, people don't want to have supporting civil warfare with, you know, with children walking around with AK-47s and all that sort of thing, and or even seeing kids in the Banker Bellington Islands digging, you know, for tin and having these clay walls dry and then crack and then bury children. You know, that was advertised by Bloomberg in the magazine. You know, it's you know, if the world's going to, you know, be true to its word and go down and, you know, we'll put a lot of this ESG into play, then primary tin deposits all of a sudden are the only supplier of tin in the world. Then, you know, it's going to be huge impact on supply, whilst demand is going up. It's a perfect storm. So seeing the price going up the other day at 8% wasn't a real surprise. It's going to happen. And like tin, nickel's having its run, lithium has had its run, cobalt's had its run. So you know, that graph that Massachusetts Institute of Technology produced for Rio back in 2018, metals most impacted by new technology, everyone went, oh, I want tin's on top of that graph, above lithium, cobalt, silver, nickel. Everyone talks about nickel, everyone talks about the other one, everyone's forgotten about tin. And so, but now it's, you know, all of a sudden you've got to take heed about all these sort of things. You know, there are a bunch of smart guys out to look at this, and they can see, you know, I can just see, you know, solar panels require tin, energy storage for, you know, artificial intelligence, EVs, all this, you just tin. You just hit. That's where it has to be. It's not a large amount of tin, but when you've only got 360,000 tonnes per annum being produced, we're going to get the extra 30%. And all these mines projects have been sitting around the world because one is there was hardly any exploration since the mid-80s. When we started exploring Mount Lindsay, it hadn't been a drill hole for, you know, 20 odd years. And then a whole new generation of projects started popping up along with Mount Lindsay, and a lot of them stopped because they couldn't, the price wasn't, you know, high enough, and the investment wasn't there. You know, the investment community wasn't sort of, but you know, people in you know, in our experience, Germans, which is very much, you know, engineering-based sort of economy, they understood the value of tungsten, and you go into Asia, they understand the value of tin, you know, there are groups who understand that, and so I think we got, you know, some great products there, and I think you know, tin is well and truly overdue. But if a supply shock, you know, dumping of alluvial tin, will that appear again? The Brazilians did it before. It happened in Malaysia before. You know, all the way to vast amount of along that peninsula, from Indonesia peninsula up to Thailand, and huge amount of tin, Burma up to Burma. But you know, if it's going to be a hard rock source, it's going to take a lot of while to develop. And just a quick little story there for you, Noel, that I keep telling people and don't believe it. Those islands, that Banker Bellington, those islands have been famous for producing tin. In fact, there's a company called Shell, metal division called Billiton, named their island called Bellington.
Yeah.
Is named after, Billiton's named after that island because
that's right.
they made so much money out of tin there. So our BHP Billiton is roots is tin, and I remember going into the Renison Bell mine site when Peter Cook was there. I sort of worked with Peter previously, and he said when the old boardroom, we got the old wood panelling from the 60s, 70s, you know, classic, and there's this tin ignot sitting there, it's stuck on the wall, and it's got Billiton written on it. So it's and I asked, where does that? And he told me the story about it and how it was named, and I've never, you know, everyone goes, oh, Bellington, you know, this anglicised it, and
it's like everything else.
Like everything else. So and maybe one day the bigger companies will sort of reach down into the tin sector and like they did before, and you know, if the demand goes up and all that, but still, you know, tin's a very small metal, if you like. But you know, it's starting to get. The Australian government is the only place I haven't seen tin listed as critical. So maybe that will change this week. Anyway.
Oh, look, I think. I mean, you brought up the term in the perfect storm. I think this perfect storm is there in the sense, like if you break it down to the EV revolution, and you break it down to the US government now seeking to have a look at this critical elements, critical metals supply, and then you got the rise of the uraniums, and you know, where is this supply going to come from, the vanadiums, all this kind of thing, that and tungsten, tin fits in there, and then you got the rise of the use of electronics, because we're all sort of suddenly realised the internet was right. We can actually do so many things with the internet, but I need this and to make it all work, you know, and the use of this. Look, tungsten's only the annual use is 100,000 tonnes a year. You're saying tin's the same, but that was in the old days, right? So now if you have more and more users for this, the supply's got to come from somewhere, right? And that's I think, and the perfect song includes, like, for me anyway. That's why I sort of reached out to you and said this is a good topic, because you're now at the position where, you know, eventually you become self-funding. You've got this product there where you got tin that's rising, and you can actually make money from it with the current situation. The project, I like the project. I mean, we could go on forever talking about the project. Absolutely. Which we won't. And then you've got your upsides in your Golden Grove, and you've got your Julimar lookalike in Thor and things like that. There's a lot of upsides there. So therefore, it's almost like you have the luxury to be able to look at all these other projects. Whereas if you wasn't Venture Minerals and you're somebody else without the little iron ore mine that you call it, that's going to be pumping money, you probably you got too many projects there. Where are you going to fund it? You know. So I think in that sense, that perfect storm is where I see it, and that's why I reached out to you and said, "Oh look, I think you got something there, and there's no value in that project, as you said, that's in the market says, but I think that's a hidden thing, and when that kicks on, I think again, like everything else, it takes off without you if you sort of, you know." Yeah. But look, you know, guys, I think it's that's what I'm trying to get at to the viewers, you know, that this kind of story that you should look out for, and I think, you know, going forward, you sort of see where Venture could go, and I guess, you know, in the market, although it seems that people are saying it's going soft, but I think funding is still strong, optimism is still strong. You are still getting rewarded for good stories. So I think, you know, guys, look, I met some of you guys, and it was really great at the RIU conference. Look, just I encourage you to reach out to Andrew with your questions. These kind of things are unique in some ways, and I'm sure Andrew will be happy to answer any questions. You know, put the comments on, and I'll make sure he answers them. But you know, look, and going forward, I guess, you know, we've covered sort of a fair bit in terms. Where do you see how this will this become part of the air focus for the company going forward?
Well, look, I think Mount Lindsay's always been the flagship asset for the company, and you know, the company's at heart, the core of it is that we're good explorers because we've found three deposits there in Tasmania. Yep. So there's Livingston iron ore deposit as well. So along with Riley and Mount Lindsay, and so our track record of exploration success. But I think you know, as one of our major shareholders telling me, he believes Riley's an enabler. It enables us to build Mount Lindsay, which was, he was heading up a Singapore fund there, and all his clients understand. If you ever go to Singapore and Malaysia, it's tin, ignites, pewter, the whole lot. You know, it's right, sort of like tin, and it's just. So he's still a big believer. He's been in the stock for 10 years or even more, and so, you know, for us that would be a flagship asset. If we're to WA, you know, to basically keep the team together and use our skills, and that's now starting to yield. You know, at Coolin, Golden Grove. Obviously, we did a great JV with Chalice, so that's not costing us anything, but. You know, we've got that balance there, and if we end up getting some exploration success in Western Australia, it'll be a good problem to have. Yeah. And the money we get from Riley will, you know, who knows? As I told people at the conference, you know, I spoke a little bit more about the Chalice JV just to show how similar. But you know, we've got the EM anomalies, we've got the mag feature, looks exactly the same. They've got to spend $300,000 by July. And you know, we've already done all the groundwork, so they're going to get into drilling quite quickly. And when they talk about it, when we did the JV, we were $1, then it will be $4. But the great thing about it is that if Riley gets us the money, you know, ideally that most of that money is going to be going towards building Mount Lindsay. But you know, if Chalice find another Julimar and on our Tor project down in the southwest of WA, then 30% of a $1 billion asset is still $300 million, and our market cap's 75. So it's, you know, things could change. It's going to be a huge year for the company. I've said this to you before already once, but there's so many things happening on, and that's just that's running its own course because they're earning into the project. But you know, we could hold a 30% position in a significant discovery if they're successful. But yeah, look, we'll see what the WA stuff does, and in the meantime, in the Tassie, well, you know, we've spent $50 million in Tasmania, most of that in Mount Lindsay, but we can leverage off that, and not a lot more money is going to get Mount Lindsay off the ground, and like I said before, Riley will enable us to, you know, put that lump of cash, and if we're lucky, maybe Riley will make a whole $50 million we need, and if it does that, then you know, we won't have to go back to shareholders at all. You know,
I think from the critical metal side, I think there's more upside than downside now, and I think from, you know, what I'm seeing, that's probably got a good chance of coming true, which will make you guys in a perfect position because there's not too many of these tungsten, there's not much. No one else doing sort of tin, I think, but definitely tungsten. That's so I've got one question. How, I love this word. How shovel ready are you guys? If you were just to, you know, bar all the things that could go wrong, how shovel ready is this project?
Look, I think someone always asked me the question: how long does it take to get a mine off the ground? And you really have to talk about 7 or 8 years. You know, you find it now. Most of that's done here. We've got a mining lease. We've already got, you know, government approval. Most of the government approvals. We're at the last hurdle, and with this new flow sheet, we're going to have to do a little bit more met work to shore that up. But we've done all the base work. We've drilled the deposit out. We've done the geotech, flora, fauna, all that's done. So, you know, even having said that, I still think, well, we could probably get this up and running in the next couple of years. And that's, you know, most people talk about, they're miles away, most of our peers. And, you know, the only guys that are even similar in terms of building a tin mine, a Casbah, they're now delisted. And they sort of, I won't say gave away, but they sold 25% of their project already to someone else that only owned 75%. And you know, their ore body's more narrow vein, sort of underground sort of thing, and it's a different style. But in terms of the economics, very similar to Mount Lindsay, but they're pure tin. But the economics are very, very similar.
And I think they're in Africa, aren't they?
And they're in Morocco, so it's got its own issues. But you know, all the other projects in the world are usually, for tin, metallurgy is a key. Got to get the met right. So the met's big tick for us is the met. And I used to tell people like this: the first thing we bought at Mount Lindsay, almost, you know, besides doing the first few holes, is a microscope. We spent $10,000 on a microscope. We've got R&D claims because of tin tungsten deposits aren't very, very common. And they said, oh, we've got a microscope for, well, you need to work out to make sure the tin, which tin is goes in many minerals. You've got to make sure you can get the tin out and make sure it's not a stannite or you know, which a little bit of renaissance got. You've got to make sure the tin is cassiterite and it's not too fine. And you know, like I said, 80% of our tin is cassiterite. Most of it is, and it's good, reasonably coarse grain, because it can slime. So tin metallurgically is quite challenging. So be aware of all those other projects and that are out there. And Mount Lindsay, you know, you look on the graph, look at the grade, and you go, the grade's not very good, because you're only talking about 40% of the story. But the project is economic. We'll be able to get the funding ourselves. We're very, very advanced. You know, I see other projects who are in third. I could drive a truck through all their drill out phase. They're miles away from finishing it. And we've got 100,000 metres of diamond core drilling into this thing. So it's sort of, you know, we are well ahead of, you know, Casbah would be equivalent to us in terms of position where it's sitting. You know, but like I said, they're in North Africa, and they've struggled to survive, and diversification for us is why we are where we are today. You know, we haven't drifted and become a penny dreadful. We've sort of, you know, we're still hanging in there, and we're now getting the benefits of diversifying. And then because of hanging in with a great asset, we've also got the benefits of this change in the tin cycle, which we all knew was going to come. It was all going to happen, and you know, the digging that's been happening in Myanmar by the Chinese, they've just gone in there and dug what they like and made a mess, and I'm sure they're not going to clean it up. You know, but how much more longer the world's going to put up with that is debatable, and you know, there's a fair bit of corruption, all that happens in Myanmar, and we've seen evidence that's again. So if the world doesn't want to, you know, have its tin, then you know, already the Chinese are holding back their semiconductors. So that's sort of not very nice behaviour to be part of the world community. But anyway, so tin, I think, will become a critical mineral going forward. But yeah, I think Mount Lindsay, you know, like I said, the company was a $100 million company just for this asset. So we should really be thinking of similar valuations of that again for Mount Lindsay going forward.
All right. Look, Andrew, I mean, there's no hiding in the fact that I quite like the project and everything else. But look, thank you for sharing, and I'm glad, you know, we can probably do an update on, you know, several topics of this today. But look, thanks for sharing, and let's see how we go, and you know, who knows where tin price goes, and we could be talking about this again next week.
Well, look, who knows? Maybe it'll be 50,000, 60,000. I don't know.
Yeah, I don't know.
Who knows? But no, thanks again. Thanks for the opportunity. Thanks for reaching out and saying, you know, we've got a lot on, and you know, you called this before the tin price went up that it was a good time to talk about Mount Lindsay. Yeah. And anyway, well, we'll follow your lead again.
Yeah. All right. Thank you.
All the best. Cheers.